Welcome back to the YieldMax 100 Share Challenge. This series is to track what would happen if you had bought 100 shares of each of the YieldMax ETFs starting in December of 2024. Today is payment for Group D, and we are starting with AIYY. We are up to 117.69 shares, average price of $8.38, and current price is down to $4.85. We are down $4.15 on that one from the beginning. The dividend this month was 32 cents. We're looking at a 79% yield, and 32 cents is trending down, but still in the 30s. Let's see if it hold up. We are in a very down market the last few weeks, so let's remember that. AMSI, we're up to 107.77 shares, average price of $19.04. The current price is $16.36. Our dividend payment was 42 cents, 45% yield, and 40 cents is on the low side. As you can see, these last 3 months have been tracking down. When the market was doing good, we were up in the 80 cents, 80, 70, 60, and even $1. So we're doing on that one. Apple, 106.37 shares. Average price $18.21. The current price is down to $14.63. Our dividend this month was 34 cents, which is a 23% yield. And it is on the low side, 36, 34. We did have 28, so that's our low mark. 41, so this one seems to be in the 30s and 40s. So even if it's on the low end, it's still in the ballpark. Disso, 106.77 shares, 16.77 average, 14.13 current. This one paid 29 cents. 33 for the yield. And this one has been bouncing the 20s and 30s. The 20, 30, 40, 70, 50, 40. So when the market's good, you're looking in the 50 to 70, and now we're looking in the high 20s to maybe 40, depending on how they do on their weekly trades. MSTY, we're up to 123.86 shares. The average price, of course, is $28.68, and the share price is down to $28.86. And as you can see, that one's down almost $9.68 total, but we did have a $2.44 recover on the day. And don't forget, these prices reflect the dividend payment, so they will be down because of that, just by the dividend payment. And this one was $1.38. So it recovered 10%, which is a little, it recovered a little bit of its payment right after payment, or it recovered a little bit. So that's not bad. 138. It's a 57% yield is still pretty good. It's hanging in there. As you can see, it's been falling as the market's falling. It would have been nice to get that stay in the $2 range, but it's down to $1.30. Still decent yield if the share price would stabilize. It dropped quickly, and then it kind of you can see it held in a little bit here at the end. Here was that drop. This is when the market started its fall. SMCY. This one we're up to 124.55 shares. 26.46 is our average, and we're at 24.29, so we're close to our average price. If you look at it in this column, your average dividend is almost your current share price. And this one, we made $141 just on Friday, so it recovered that pretty good on one day for its after payment. We're only down $269 total on that one. The dividend was 197, so that's strong, 89% yield. And this one was 172 to 190, so this one's been holding. I mean, you can see it was in the low twos. This $5 was an anomaly, so that one we can't count on that every month, even though it'd be super nice. SQY squeeze 112.12, 1841, and it's dropped all the way to 1117. It paid a dividend of 50 cents, which is a 56% yield. And we had 50, 50, 60, 60. So it was doing really good, and then it tanked, and then it's been slowly dropping. But as the market goes, so do these. Now this is the one that's positive, and that's because this is the YieldMax short, so it does better in a down market. And you can see, even though we only have 106.56 shares, the average price is at 1726, and our current price is 1749. So we are positive on that one. 45-cent payout. See, its yield is low, but it's been hanging in there. This one always has had a fairly low payment, but like I said, this is a short option, and that's why it's done better in the down market. And if you're wondering, down here we have the portfolio horizon. So in years, in 1 year, our annual dividend income will be about $3,400. And then in 2 years, it'll go up to 32, 51, 62, 76, 92, then 11, 13, 16. You can see the further out you go, these numbers really start to jump. If you held this portfolio for 20 years with its current fundamentals, you'd be looking at $149,000 a year off your 17.5 investment. And that's, like I said, that's if everything stays the same, but you know, nothing stays the same. That would be too easy if it worked that way. We can go to our Google Sheets and we can see how we're doing on each. So with AYYY, we have lost $3.89 in share price. We've lost an actual loss of 303.26 of our portfolio. We are at 12.83 for recovery of our initial investment. With drip, without drip, we are at 12.24. You see we've made $112.09 versus 106.94 without drip. AMZ 274 in share price, 146 in actual loss. We are at 7.41% of recovering our investment and 7.24. And if you took this in monthly payments, you'd be in the 40s, 40, 40, 50. So that would be your monthly payment if you took it as just the cash instead of reinvesting. Aptly, we're down $3.77 a share, and we're down $283.93 in total portfolio value. Dividends at $100 is 5.48 with drip and 5.40 without. As you can see, with the small payment, you don't get a lot of shares, so that separation doesn't grow very much. DISO 272 in share price, 175.89 in actual. And we are at 6.21 in recovery and 6.07. MSTY was one of the good ones that we had when we started, but as you can see, it's lost $8.60 in share price and $362.38 in value. However, we do have 123.86 shares, so our payments will be more valuable because the number of shares. See, we're at 20%, 20.55 of recovering our initial investment, and 19.27. So you can see the separation starting to get, it's a full percent apart almost over, because you're at 605 or 667. So that's with the higher dividend payment, you're going to get these increased shares. As you can see, you went up 7, then you went up 11, and now we're up to 123. So that one's actually not bad. You've only lost 362, but if you hold this for a little longer, as long as this share price doesn't fall too fast, which hopefully the trade wars and all that gets figured out soon, when we get back to stability, that will be able to catch up pretty quick. Oh, look at this one. SMCY, even though we have lost 241 in share price, we are up $355 in our investment. So this is a positive returner. You can see that it's had great returns. We're up to 124.55 shares. We're at 23.36 with the drip, and we are at 21.66 without. And you can see that separation when you have a good performing dividend stock and you're reinvesting. Your return is going to, by reinvesting the dividends, your return is really going to accelerate. SQY is, ooh, look at that, 770 in share, 634.53 in lost value. We're only at 9.38 return on initial and 9.07. And last but not least, YQQQ. This is, like I said, this is the short, so it does good in a down market. It has increased 23 cents in share price, which I believe that's the only one the share price is up in this group D, and we have made $137. Don't know what that's doing there. Sorry. We are at only 6.43. You can see these dividends being low. We're not getting a lot of shares per, so, but that's okay. 6.43 and 6.28. You still get, $25, $35 a month on your dividends. As you can see, these have been just a little higher because you're reinvesting the drip. Group D overall, remember, this is where we started with the 1384 as your initial investment. And as you can see on here, your cost basis is 17,515. This is with all the dividends reinvested. It counts that as more income, or you're adding to your cost or your shares that way. On the Google Sheets, this is not. We don't count the dividends as money out of pocket going in. I'm treating it as a return on investment just for the sake of this. So, like I said before, you'll have to remember how you want to look at dividends to meet your needs. Because if you're earlier in life, I would recommend, if you're going to do dividends, make sure you got them set up as drips so you can reinvest those dividends and grow over time. And if you want to see what that looks like over time, we'll pick one of the better performers. And if you see, like I said, this one had good monthlies, so we can use this. Here's our overview. And look what happens in the future. Just this one alone in 20 years is going to be an annual dividend income of $31,000 a year. You will have reaped a total of $156,000 in dividends, and your holdings value will be $159,000. You'll be up to 6,579 shares. So you figure if you're getting even if it's at 50 cents, you're looking at over $3,200 a month in dividends. So that's something to think about for long-range goals. We'll take a quick peek at our weeklies portfolio. This one is really not doing very well. You can see it's obviously everything had a recovery on the day, but look at that. Negative, negative, negative. Lots of red. YieldMax is the only one that's doing reasonable. It's only down $100. It's up to 112 shares. I mean, look at this one's down $800. That's QDE. That's a round hill fund. Take a quick peek at its dividend history. Yeah, well, look at that. 15 last week, 25, 20, 25, 20, 18. So it seems to be a 20-cent payer. We did have that outlier, that 80-cent 2 weeks in a row. That was at the end of the year, so they might have been having to pay out some profits. Let's go back up here. We'll take a quick peek at Group A. See where it's at. So crash is your short for Tesla. And as Tesla has gone down, that one's gone up. You see the price has gone up from $689 to $780. Feet and 5E, those are the two new ones. GUI is only down 197, so it has a little room to recover. That one's down 322, 479, 800, 400. Whose else is close? XOMO is close. They're only down 100. And they're only at 105 shares. So Tesla is the leader in the clubhouse at 120 shares. And it's been paying. Yeah, you can see it's Tesla. It's dropped. We had the $2.20, then 70, then 50. And it might go down a little more. Tesla's hurting right now. So that's next week, and we will see you next week for the Group A payment recap. I do appreciate you joining me. If you could do me a favor, go ahead and scroll down a little bit on your window there and click that like button. Go ahead and subscribe to keep up to date. And I appreciate you for staying with me today, and have a good week.